following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Pete in Long Island. Hey, Pete, what's going on?
Hey, Tom. Good evening, and I want to give you a big thank you. Last night I called for your advice, and you gave me such wonderful and correct information. If you remember, I was short 3 gold stocks,
Yes.
NEM, AU, and AEM.
Right.
And based on your opinion, you've been right on the mark with this. Boy, it was wonderful, Tom. I got to be honest with you. It's unbelievable what you're doing for your radio listeners.
Well, I appreciate the call, man. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks, kicking into the Labor Day weekend. Hope everyone has a great one, safe one. No drinking and driving out there, folks. Grab a friend, grab a cab, do whatever you have to do, but don't get into that car with those keys. Believe in yourself and everything you can be. Market-wise, let's take a look at it out here. We had the Dow Industrials. The Dow Industrials are down 276. You get the NASDAQ off 51. S&Ps are down 28. Gold contract down $3.90, trading at $11.20. Silver down 18 cents at $14.52 an ounce. Platinum down $13 at $9.92 an ounce. Copper down 6.5 pennies. Gave it all back from yesterday at $2.31 a pound. Light sweet crude off 89 cents at $45.86 a barrel. Bonds. We had the 10-year up 11 ticks, 127.23. 30-year up a full point and 12 ticks, 155.27. Bottom line, folks, the 10 and the 30, once again, going top side. Bottom line, what does that set up? This sets up bonds want to go higher. They want to go after their April of 2014 high. We'll see whether they're going to take them out. But bottom line, the bread is going into bonds. King dollar down 138 ticks. King dollar just can't handle this minus swing point. We are at 96.28 right now. Euro is up 17, trading out at 111, and the yen is down a penny at 119. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, let's go to the world of the S&Ps, okay? So what we have out here is this. You're coming into the long weekend. We're dealing with the Friday. You're dealing with 3-day weekend. You're dealing with us being closed Monday, Asia being closed, opening up Sunday night, and it's not a good scene, folks, if you happen to be along this market. So the SPYs right now have done 142 million shares. And by the way, 142 million shares, by the way, folks, is a lot of shares for a Friday and kicking into the holiday weekend. We did 152 yesterday. We're trying to get to a higher high. We're going to do probably 170. 150, 160. And what you've done is this. You haven't hit the swing yet, okay? So what's going to be vulnerable on Sunday night, well, it's going to be Tuesday, but the futures are open Sunday night, are two different areas. The first area is going to be the low that was established on the 1st. The next one is the low that was established on the 24th. And the lowest on the 24th is pretty intense. Not the 24th, rather, the 25th. The 25th was 186.92 inside the SPYs, and right now you're at 192.13. We go take a look at the NDX 100. It's the same type of setup inside the NDX 100. What you have with the NDX 100 is this. The Qs right now are trading out at a price point of 101.97. You've done 38 million shares. When we try to get higher, yesterday did 45 million. So what does this leave at? This leaves at the Qs want to run down to 100.63. They want to run down to the 25th, which is 98.01. Gold contract. What do we have with gold? Bottom line, they hit the gold stocks. Not all of them, but they hit them pretty good. The gold market itself, bottom line, came GC. Gold is trading at 1120.70. And we have with the gold market, there she is. We did 106,000 contracts. You got to a price point of 1115. We closed at 1120, and anything inside the 1116. This was a test of the lows. Has lighter volume. Bottom line, I want to see it get away from this 1120 area. That's what it comes down to. Silver. What do we have with silver? You take a look at silver. You know, silver had some good price spread yesterday. Bottom line, it didn't hold its price yesterday. So now we go back and we take a look at the silver market this morning. It stayed in that bigger range, just barely though. At 1442 is the number. We're at 1452. So bottom line, silver also needs quite a bit of help. Now, let's go over to the bond market. The bond market, bottom line, is still screaming that the S&P wants to go south. Bonds not want to go north. They are north, and they just want to go further north. What the bond market did out here today is this. 10-year did 1.1 million contracts. That's monster contracts, by the way, particularly on a holiday. It closed at 127.24. Well, it's still open, but we're at 127.24. We've hit 127.12. This is saying bonds, folks, are going right to the high. The last high, the spike high, is 129.10. You take that out with volume, you're going to have an ABC structure on the way up. The 30-year got off its butt today, had some juice behind the move. 30-year was teetering right at the lower end of its range. Well, it got out of there today, USZ5. It got out of there today with some price spread. We're done 243,000 contracts. Has the price move, has all the above. 30-year also wants to go to this 160, 117. So it's a big number out here. We go take a look at the King Dollar. Just King Dollar couldn't handle it. That's the bottom line, which is just amazing, by the way, okay? Because what you have with King Dollar is that the swing point on King Dollar, folks, is 97.10. The minor swing that it's been trying to get over is 96.35. Bottom line, you're only at 96.25. Couldn't handle it. That's saying quite a bit. Particularly it's saying quite a bit because the jobs number came out this morning. Jobs number was cool, meaning that, 170,000 jobs, or 177,000 jobs are out there. Does that mean that the Fed has to go up on rates? My take is that, listen, the Fed's not going up in September. And they're not going to go up in September because they're going to be worried about throwing another wrench in this market that's already highly volatile right now. Now, the S&P, the ETF structures are doing some volume, actually a little bit more than would be expected on a day like today. The indices, however, have short volume. Well, let me show you this, okay? So the indices out here today will come in. On the NYSE right now, we're at 500 million. That'll come in all of 700 million, which is light volume, by the way. The NASDAQ will do about 1.5 billion. The key here, folks, is that you're not at the swing point. This thing's going to go after the lowest swing points. We close like this, and I suspect this is how we're going to be closing. It's going to get a little nasty into this close. It's already tried to do a counter trend bounce about 20 minutes ago. Just there's no juice. And who's going to step in front of this freight train on a 3-day weekend? Stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go inside some of these indices. So if we start with the Dow, Dow's down 290 right now. The leaders inside the Dow, now all the Dow stocks are in the red, but the leader out there is Boeing. It's still down 132. That's about how intense this is. So you got Boeing down 132, Apple is off 106, you got Nike down 117, and you have Disney down 111. The laggards that are actually bringing the Dow Industrial South, DuPont's down 164. Goldman Sachs is off $5. The financials are getting smoked out here today, folks. You get Home Depot down 258, and GE is down 54 cents. We go over and we'll take a look at DuPont right now, and this is where there's a lot of different problems in this marketplace. But if you want to look around and really just get an understanding of how deep a few of these equities are into the 24th. So the 24th, folks, is your benchmark. That was, of course, the disaster on the way down. And if you look at DuPont on the 24th, the high was $51.19. The low was 48. Well, we're trading at $48.91. That tells you quite a bit. What DuPont has also done, which is pretty intense, is it's broken a little B point, and it looks like it's going to have volume behind the B point, the break. And that's saying, guess what? It's going to go down to the bottom of that 48. Now, if DuPont is going down to the bottom of the 24th, rather, you know, that is going to bring the probability higher that we're going to go after the 24th also. We take a look at the NDX 100. We take a look at the strength versus the weakness inside the NDX 100. This is what you have happening. You have the strong stocks inside the NDX 100. Mylan Pharmaceutical is up 70 cents. You have Dollar Tree up 89. Now, Dollar Tree's been an absolute mess. You know, that's a big dead cat bounce. Electronic Arts is up 52, and Micron Tech is up 12. Bringing it south on the way down. You have JD.com down 166. You have Trip Advisors down 209. Expedia's off 149, and Netflix is down 277. If we go over and we take a look at Netflix, this is another big heads up. NFLX. NFLX. So when we take a look at Netflix, what you're going to see is this. When we start dealing once again with the 24th, Netflix is below trading of, no, it's not. Oh, there it is. Netflix is trading at $98.35. Well, the high of the 24th is 100. The low is 85. The closing price was 96.88. Netflix is right into it, man. Netflix wants to run down into this area of 81, going all the way back to the April 16th level. You know, you start taking a look at some of these, the further that they actually get into that trading of the 24th, folks, the more problematic it becomes. Big Blue. IBM's been a mess for a long period of time. It's showing its cards right now in a big way. That's after the company buying stock all the way down from like $210 to somewhere about $1.70. IBM, you're down 298. On the 24th, the high of the 24th was 147. The low is 142. We're at 143.80 right now. IBM, same type of setup. And what almost all these equities have not done, folks, is this. They haven't tested yet the September 1st low. So what the setup is this. And this is going to be just really a wild Sunday night in the futures market, because our markets are not opened on Monday, but the futures are opened on Sunday. I believe that they're only open for, I should have found this out before I got on the air. I believe they're only open for a certain amount of time, because normally when we have a holiday, they open and there's short sessions, and I'm going to find that out by the time we get on the. Until 1 p.m. Thank you, man. I'm Steve Rhodes, just answered me. So they're open until 1 p.m. on Monday. So that's pretty intense. If they're open to 1 p.m. on Monday, there's plenty of time for some heavy destruction. That's a long time. So then what would end up happening is that I believe then that's a holiday, and then they actually don't open up that night. They open up in the morning. Bottom line, it's going to be problematic. And what you have here is this. Because we haven't, see, yesterday what we did is this. Yesterday, the markets tried to get higher, and they did test the highs that were generated out here on the 31st of August, okay? If you didn't test the highs, you got into that bar, they rejected it. What you haven't done is that so as soon as you can't bust them up, guess what? They're going to go bust them down. You know, this is going to be an intense little deal coming into that lows that were established out there, particularly after the fact that China's been closed. And then, if you want to get into the psychology of it a bit, with China being closed, so check this out. I was thinking about this afternoon. So technically, the market wants to go south. Technically, it very well be a very large ABC structure on the way down, because I can make the case that it hasn't even tested the high volume swing low of the 24th. China, they've been trying to control their markets for a long period of time. We know through experience that you can't control markets. You can help them out here and there, but you can't control them. So their markets are out of control. They've been trying to do their best to control them, you know, whether it's basically putting people in jail, you know, all of the above, short selling, stopping short selling, all of this, okay? I suspect this holiday, I mean, they had these two big parades and, you know, celebrating World War II and the whole ball of wax. I suspect what they wanted to get that by so they could make a big deal of it. That being said, because they can make a big deal of it, what could very well happen, like real easy, is that they'll just let that market go because they got done what they wanted to get done, you know, set it up. I mean, if you read some of the stories about how they wanted to control things, they went so far, folks, as making sure that they took birds out of the nest so there's no birds going across the parade fields, okay, when they had this big parade. Okay, that's about as bizarre as you can get. You know, there's no doubt about it. So, okay, so the futures market Tuesday trading resumes at 6 p.m. Monday. Okay, cool. So the futures market will open Sunday night, I guess stop at 1 o'clock Monday, and then open back up Monday evening. There's going to be some big action here, and it looks to me like as we come into this close, the closer that we get, the dead cat bounce looks like it already did its thing. Let me just see here. ESU 5. Okay, so we bring this back a little. Okay, so the E-minis at 1420 were at 07. You did the bounce, you got up to 19. You're at 14 right now. Anything, well, listen, here it is. Anything under 15.75, you're at 14.75. You know, says, guess what? As we come into this close, they can, they can just bring it down. You know, what you are going to have, this is where the deal happens coming into this close. So you can make the case that if you're short, you want to cover, take your bread. If you're long, you want to basically get out. Here, I'll go through a few other scenarios with you because I've been going through all of them. This is Tom O'Brien. This is TFNN. Dow Industrials are down 302. Nasdaq's down 59. S&Ps are off 31. Stay right there, folks. We're coming back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow Industrials down 274. You get the Nasdaq off 52. S&Ps are down 28. And as we do each and every Friday at 20 past the first hour, let's go over to our man, Mr. Steve Rhodes. And don't forget, folks, at TFNN, we do 10 hours of live programming every trading day. Get it right on your cell phone. We start at 8 o'clock in the morning. On your cell phone, TFNN.mobi will get you the full audio. If you want to get the audio with Tiger TV, just go to TFNN.com. On the right-hand side, you're going to see a little box with devices on it. Our server will just hit that. Our server will understand what type of device you're on, and you're going to be able to get Tiger TV. Steve's got a great newsletter. It's Mastering Probabilities. the way you can test drive it for 30 days right now, come over to our website at TFNN. You're going to see newsletters, trading newsletters. You see Mastering Probabilities right there. You can test drive it 30 days right here, right now. Steve Rhodes, what's going on?
You are a master of introduction. I love it.
It's a beautiful thing, brother.
It is. It is. Now, I know you're going to give some of your scenarios of what the markets are going to do. And you were just talking about taking a look at it from both the bullish side and the bearish side. I'd like to give our viewers and listeners my take as well.
Okay.
And the chart that I've got, and this is something that some of these patterns are things that people can do at home. And the reason why I want to do this is because I think we're at a really serious precipice. And if we take a look at this chart here, it's just simply a monthly Dow chart from 1994. And one of the easiest things that any of us can do is just simply add trend lines. And if we take a look at going back to 1994, all the way up into the top in 2000, we can see that once the trend line broke,
yes,
price went ahead and moved lower. In fact, if we take a look at the same period, or if we go to 2002 to 2007, we know that as soon as that trend line broke, prices continued to move lower. In fact, they went all the way back beyond the previous swing point. And what's so important, these are monthly charts, so we're in the month of September. What happened last month was as the market was moving down, into the end of August, came right down and tested that trend line. As we speak right now, you and I, price is trading below that level. And based on what we take a look at that has occurred over the past three larger trends, when that trend line, this is the Dow that we're looking at, when it gets broken, it's really important for our listeners to start to take precautionary steps out there. Now, it's not just the trend line that is under attack out here. If we go take a look at, and here's the thing that I want to actually share to folks, because it's a monthly chart that we're looking at, and some people will say, maybe they could make the case that that the trend has been tested and it's a buying opportunity. And I could understand that with one exception, well, a couple exceptions out here. One of those exceptions, if we just take a look, and you and I have looked at this chart a few times during this segment, if we look at the last 82-year average of what the Dow does, I've got a bullet point as to where we're at right now. And from this point until October, over 82 years, the average is to move lower. So if we go back and we take a look at what the Dow did last month, odds favor that we're going to break this trend line. And what has happened every other time that we've broken that trend line, the markets have moved lower. Now, if we take a look at other topping patterns out there, those folks that listen to my show or newsletter subscribers, they know that we pay attention to when price moves either higher or lower. Right now, we're just taking a look at when price is moving higher with less relative strength out there. And if we look at, Tom, if we look at the top in 2000, the top in 2007, and now the top that's in place at this stage,
yes,
those patterns are also out there. Now, those are going to be more like advanced warning signals. So we're beyond the advanced warning signal because we're now down around the trend line. But it's even, quite frankly, it's even worse than that. There's a couple of moving average or exponential moving average lines that I use, the 8 and 13 period. And what we can see right now, they're kissing. When those things have crossed in the past, they too have led to significant declines in the market. So right now, as we speak right now today, we know that we've got trend lines that are under attack or are being broken.
Yeah.
We know that we're in a seasonal cycle that from this point through October typically moves lower. That says the trend lines get broken. We know we've got tops that are formed that are similar to back in 2007 and 2000 out there. And if we just simply take a look at wave counts, I love using part of the Chapman wave where we get up to a seventh wave. We've got that in place as well. So we've got everything in place right now that says you've got to be extremely cautious and careful out there. And then there's one more thing that I'm going to share with the listeners and viewers out here. That move down that we had last week, which was certainly a trip out there, if we take a look at another analog, you see, the patterns in 2007 are matching the patterns in 2015, almost like to the T out here. If we take a look at the top that was formed in 2007, that actually took place on October 11th. And that really represents the black line that is on my chart right now.
Oh, in 2011 we're talking. Okay, go ahead.
2000, yeah. So the black line on my chart is the beginning of the top in 2007. So I'm just using that as my beginning point. That's the black line. Now, if we take a look at the top that actually formed, because right now we know that I'll say the high, we'll call it the top or the high, in 2015, that took place on May 19th. If you go back and see when the Dow actually formed its high, it is on May 19th. All I've done is started my 2015 top to start off with when the 2007 top, and look at the analog. Look at how the market moved lower. Right, I mean, it's like, oh, it's not following it exact, but it's so darn close that what this actually says is because people might say, well, how long is it going to move down? With the trend line being broken, with those tops that are in place, this says, and there's going to be a nice bounce along the way. There always are in markets like this, but this says the market moves lower until February 2016 or even longer. So there's my doom, gloom, and boom report out there.
So the February aspect, though, how are you getting that now? You're getting that from the match of the chart, right? Is that what you're doing?
I'm doing is taking in essence the time period of when the Dow formed its top back in 2007.
Yes.
And because instead of trying to take a look at it on a calendar year basis, all I'm doing here is I'm just starting with when the high was actually formed in 2007.
Yes.
So I'm starting with that high from October 11th. And then all I did was said, well, what if I take a look at the top in 2015 right now, and I just use that as my start point. And when I use that as my start point, it was as if we should have expected that huge decline, because all it was doing was catching up to the same pattern and same top that was in place in I mean, it's a trip. When you take a look at it on the chart, you're like, how can that be?
Yeah, I know.
But it is. It is what it is. So, it looks like, the market's getting ready to, move lower. Maybe we're going to even take out those lows from, in this chart here in 2007, it would say maybe we don't. But, you use this more of an analog as far as direction.
Right.
As far as, as far as direction versus really totally trying to measure the move. But, I mean, everything is in place here where, my opinion, our listeners, our viewers have got to pay attention to this, and they have to. They really should be taking precautions, because nobody wants to live through, especially 70% of our folks are using their retirement funds, that are invested in the market, and nobody wants to live through what we did back then. We don't know the extent of the low, but the mere fact, if you knew that the markets were going to cruise lower or should cruise lower through next February, you'd have to ask yourself, what kind of action would you want to take?
That's a long period of time, man. There's no time. That's not Sunday night. I want to. Now let's back down to Sunday night, because it's going to be a trip Sunday night. I mean,
it is. It is. We're going to have to come off the beach, I guess, and watch the markets.
Beautiful thing.
Tom, always great to be with you.
Listen, man, have a great weekend, safe weekend, and I'm sure we're going to be growling and prowling Sunday night, man.
Sounds great.
Cooking, brother. Have a great one, man. Have a safe one. Stay right there, folks. We're coming right back. Dow right now is off 244. Nasdaq's down 44. S&Ps are down 24. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. 877-927-6648. You got the Dow Industrials right now down 219. Nasdaq's down 39. S&Ps are down 22. You got a little bounce coming into the close out here. And what that is, folks, okay, I had said to you a little bit earlier, the aspect of what do you do when you're basically shot in this market, because that's what I was. Let me tell you what I just did. So watch how this shakes out. This is just, because this is bottom line, you're always at risk. So the market's all the way down, right? If you're looking at a chart, my take on this is that you get a dead cat bounce coming into the close, right? Bottom line, you're coming down, the NQs are trying to reach the 55, couldn't do it. Well, you know what to do? You basically close that position, right? Take the bread and then sell right back into it at 94, and that's just what we just did. Because that would be that would be the point that it probably should bounce to. And then what I expect you're going to see now, and this is where the aspect, so watch, the aspect in this goes like this. The aspect is that, you're taking bread off the table. Once you take bread off the table, what ends up happening, you have a cleaner mind. The plan, my own plan, was that I'm going to take it off there and I'm going to put it right back on the other side, man. You know why? Because if this ends up correctly, you're at, you get 16 minutes left in the marketplace. What I expect is that you're not going to be down 150. You're going to be, we're down 234 right now. That bounce, that was the bounce right there, So now we'll see, how this baby does shake out coming into the close. The SPY, and one of the main reasons, by the way, folks, is that we haven't hit the swing point. You haven't hit the lowest swing point. If this thing wants to hit that lowest swing point, so my probability is much higher that Sunday night we're going to go after that swing point. When you're in a futures market, the futures are open. Yeah, you can get in, you can get out. And my higher probability is that that's where it's going to go. We'll see the indice volume is shot. The ETF volume, however, is not shot. What you have inside the ETF volume is that you get some juice here. The small caps have done 25 million. Yesterday you did 33 on the way up. You did 45. It's going into 45, yet it hasn't hit it. The SPYs, what we have with the SPYs have some juice in them. The SPYs have done 155 million. I think that's as many as we did yesterday. Yeah, he did. Well, he did. We've already done more in the SPYs. SPYs yesterday, full day, going up, was 152. Couldn't handle it. It'll go after this 190.73, and right now you're at 193. We go take a look at the Qs, the NDX 100. The Qs have done 42 million, and yesterday tried to get to a high with 45. Qs also look to me like they're going to try to go after that lower swing point. Bonds are the thing that are really screaming. The bond market out here, to me, is the baby that is screaming. And what you have inside that bond market is the 30-year finally had the price spread, had juice behind the move. You know, we're at 155.23. Did 248,000 contracts. That's a big number, by the way. And so what that sets up, where my head, what that sets up, number one, it wants to go after the highs that were generated out there. Those highs we're talking about are 161.17. And, you know, in order for the markets to go after those highs, folks, that is, well, in order for the bond market to go after its highs, that's saying that there's going to be more fear in the marketplace and the money is going to get shifted. What hasn't happened out here, which is pretty wild, even today, is that what you have not had is that we haven't had a large downtick. We're only at minus 997. The trend was up there. The trend was 3.5 last time. Well, look at this. Even the trend. The trend is 2.37. A trend of 1, folks, a trend of 1 means that the market is in balance. When the trend goes up, it means that everyone's selling the exact same stocks. That's when lows can come in, meaning, you know, good lows too. When the trend is super low, as it was at the highs at 3.745, that means everyone's buying the exact same stocks. And what ends up happening, of course, for a supply and demand curve, a supply and demand curve needs what? Needs the same amount of buying, selling, you know, or it has to be tipped, of course, okay, because there's more buying, prices will go higher, stay higher. More selling, go lower, stay lower. Inside that context, that is a much more stable market. What we have right now is that we have a market that is not stable, and when you have markets that are not stable, what ends up happening, and this is where you want to wrap your head around, whether it's the ABC structure, whether it's Fibonacci, for some reason when markets are not stable, these numbers fire off much quicker, and they seem to be, I don't know this factually, but they seem to be, when I'm in front of the screens, much more consistent and accurate. That's kind of just how it's like, how does this work, man? They just bing, 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 bing. They come off these numbers like firing on all cylinders. If we take a look at some of the high volume stocks in this low volume market out here today, this is what you have happening inside the S&P. You have Bank of America down 24, Intel's down 40, you got Netflix off 280, Hewlett Packard's down 85, Chevron's off 117, JP Morgan. Let's go over to the banks, because if you take a look at the banks are having a big problem, folks. And the banks, for some reason, always seem to be the last to fall apart sector-wise. So JP Morgan down 91 cents today. The high of the 24th, that's your benchmark out here. So the high of the 24th is 62.92. We're at 61.75. So you're into that baby. Now, that's not into it that bad. It's only into it $1.20. But guess what? It's into it. Volume, we did 16 million. Last swing point out here, you did 23. You know, you can make the case with JP Morgan that it did reject this low out here today. Let's go to Goldman Sachs and see if Goldman Sachs did the same thing, because this will be intriguing if they did reject the lows. Goldman, no, Goldman hasn't rejected. Look at this. Goldman is into it. Goldman's done 3.7 million today. 181.08 is the swing point. You're at 181. And Goldman, the high of the 24th was 186. We're at 181. So Goldman is into that bar, BRK. Let's go look at Berkshire Hathaway. Berkshire Hathaway, BRK. That's a large weighting structure inside. Okay, look at this one. Oh, man. Okay, so Berkshire Hathaway is down $2, trading at 130. The top is 133. The bottom's 125. Berkshire is also into this. That's a big heads up also. That's a huge heads up. You know, so Berkshire got down today to 128.91. The swing point is 129.83. You know, it has rejected that level, you know, so we'll see if, in fact, that baby can get up and going. Dow right now is down 192. You get the NASDAQ off 33. S&Ps are down 18. So let's go bring in the S&Ps up, see how we get into this close right here, ESU. Okay, so E-minis had a nice bounce here, no doubt. Yeah, but she's right. So So what? There's juice in the E-mini, and this close, folks. There's juice. So the E-minis can actually get up to 36. That'll be a trip, man. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow Industrials down 199. NASDAQ is off 34. S&Ps are down 19. We're going to be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So we get the Dow down 212, NASDAQ down 62, S&P's off 21. Percentage-wise, this is where we stand out here, folks. You get the Dow off 1.3, NASDAQ is off 0.8 of 1%. S&Ps are down 1.3. Over in Europe today, that also had a bad close. Europe, the FTSE was down 2.4. You had the DAX in Germany down 2.7. Just like our markets, the volatility is there in spades. You know, the DAX, the prior day had gone from a price point of, let's see, it went from 10,048 up to 380, 10,380, and now it's right back down to 10,038 again. Heavy numbers. No two ways about that. So what you have inside the DAX also is that you're inside the trading day of the 25th. Now, I don't think we're inside that trading day of the 25th yet. Oh yeah, no. 1 second. Yeah, we're definitely inside that. The 25th, if we take a look at the SPY, the SPY was at 195.45 on the 25th. And right now, we're at 193.25. So there's no doubt that we're in there. We're in there pretty big, too. Let's go to Victor in New Jersey. Hey, Victor, what's going on?
Yeah. Would you buy QID for insurance? And also, I heard that DAX has had the death cross too overseas. Germany. They have that death cross thing. And would you buy QID like for some insurance, just a few shares? Because the point figure chart says $70.
Well, insurance. What you mean to cover your long positions?
No,
or something?
just like no. That's a QID is opposite of a QQQ. So the point
No, I know
figure
that. But
says
when you say
$70.
insurance to what? I mean,
If the market pops up, so you lose a little money. Otherwise, you stand to make a lot of money if it goes the way you say it's
that's
gonna
not
go.
insurance though. That means you're trading it.
Yeah. That's why I just bought some for a little short term.
Listen, I'm shot the NQs.
I'm just afraid that you might go the opposite the way you're thinking. They've come up with some cockamamie thing. Or
I'm sure they will. I'm sure they will. It all depends on what your risk parameter is. Do you know what I'm saying? And this one's a tough one, folks. Going over 3 days. But the bottom line. It depends on where you were positioned on the first leg down. It depends on,
What about that Germany with that death cross? You think that means anything too?
Well, I don't know. Let me see what it says here. You got
they entered a bear market too, supposedly. The
200.
That means a lot, right? The 200. I just read about that yesterday.
Yeah, here it is. I'll put it on Target TV. It's crossing right now. Yeah, listen, man. These markets are fast, furious, and they want lower price. That's my take on it. But you know that.
Oh yeah. You're going back to December. I'm telling you, you're gonna fill the gap.
My bear claws have got clipped off a few times. So.
The Qs have a gap at 73. You're going to fill all these gaps.
I can tell you this. I'm not looking for a 2007 here. I'm not.
I mean 2011. You're going back to 2011.
2011 is game. Listen, 2011 is game easy.
When you had that big crisis in August 6th, 2011. You're going back there. There's gaps all over.
That's easy. Listen, when you take a look at, listen, folks, okay. When you take a look at the market, if we put this market in, you can be the best bull in the world, and on a statistical deal, just a normal 50% retracement because we've gone up so dramatically. Okay. Well, here let's do. A .382 retracement is 1,800. A 50% retracement is 1,579. No, a .382 is 1,579. A 50% retracement is 1,405.
Well, it's 999. That's the opposite of 666. That's where you're going.
You're a trip, man. You are a trip. I love you, man. Hey, listen, you have a great weekend and a safe weekend, all right, man? That's good old Victor. He comes up with everything, man. He does. There's no doubt about it. Okay, listen, folks. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great weekend, safe weekend. Remember, no drinking, no driving. We look forward to speaking to you right back here Tuesday morning. Wow! Look at them, folks.